Good morning, winners. Welcome to Terry's Tips. We made it. Happy Thursday. It has been like seriously a super busy week, but I have had an amazing time talking to all of you like literally every single day. So let's keep that same energy. Amen. And so today, guys, look, today is the day, the video that you all have been asking for. This is still by far the number one question I get asked about credit, and that is how to increase my credit score. Look, like I swear I gotta learn, I promise you, I'm gonna learn how to edit these videos so my videos can be better. But right now, I focus on having really good content, okay? And honestly, the content is way more important than a bunch of fluff. It really is. And so today, like literally, go get a notebook and pen, and if there's any video that you have ever watched on my channel from beginning to end, today, this video is the one that you need to watch from beginning to end, because I am going to drop nuggets through the entire video on tips and how to raise your credit score. And honestly, that's the number one thing that's holding many of you back from getting your real estate loans, from getting your first time home buyer mortgages, from getting your business loans. Honestly, some of you guys are even having problems opening up banking accounts and checking accounts, having problems with employers, having to put down deposits for utilities and cell phone bills. So it is more than important to kind of get your credit in order. Get a notebook, get a pen. And so while you're doing that too, I really have decided that every single video, in the very beginning, I'm going to take 30 seconds, a little bit of time to drop a nugget for you guys, because I did that in the last video. I got a lot of feedback, and you know what? Like, this really is me. This is the reason why I do this. This is the reason why, my channel is a little bit different than some of the other channels about, credit repair and financial literacy and so forth. And so today's nugget, before we jump into the credit scores, is that if you want different results, you must do something different. Guys, it sounds simple, but so many of you guys want to improve your credit scores. You want to be business owners. You want to be investors, but you refuse to change any of your habits, refuse to change your budgeting, refuse to change your relationship with credit, with money, with finances. Guys, if you want to get to that next level, and sometimes you didn't know, sometimes you had a financial hardship. I always say no judgment zone, but when you know better, you do better. So you must be willing to change something somewhere. It may not be drastic. Maybe it's something small in the meantime, where you're packing your lunch instead of eating out every day, or you're cooking instead of ordering Uber Eats, or where you're doing your own hair instead of getting somebody else to do it every other day or something, or maybe it's you're cutting out all your subscriptions that are unnecessary. I had somebody on a Jumpstart call the other day who said that when I was talking about budgeting, they went through all their finances. They said they saved $400 by going through all of their bills like I told them to, assessing all the subscriptions and things they were subscribing to that they did not need, and literally just by assessing their bills and their expenses, going over their budget, using the tips in that video that I gave to them, they saved themselves $400 a month. I'm telling you, you actually apply this is not entertainment, guys. If you apply some of these things, you will get results. So today we are going to be talking about increasing your credit score. So if you are new to my channel, welcome. I would love for you to be a subscriber. I mean it, guys. Like, share, comment. It is helping me know that I'm giving you valuable content. It helps the channel grow. I really like, if you like it, if you comment, you let me know your feedback. I also pick my videos based on your feedback, based on the questions. And so I like to be super interactive. I'm a self-employed entrepreneur. Keep on losing my voice too. I'm a single mother of 3, and I own a consulting firm. I'm also an investor. And so my channel, I post free content every Tuesday and Thursday morning about, financial literacy, personal credit, business credit, entrepreneurship, belief. Amen. And so, I would, welcome to my channel, and I would love for you to stay. All right. So let's start. So tip number 1 is that you have to understand what goes into your credit score. I need you guys, so many of you guys think it's just negative credit or just payment history, and that is not true. More goes into your score than that. Here we go, right? I'm sorry, I've been doing good, but like I have super dry mouth. So I'm going to break down for you what goes into the FICO scoring model, because a lot of you guys are missing opportunities to increase your score, but you're also hurting yourself in areas that you don't even realize because you don't understand what goes into the FICO scoring model. So the FICO scoring model, write this down. 35% is your payment history. That is the biggest bucket, meaning do you pay your bills on time? So this is where when you guys have late payments, it is critical. It tanks your credit score. And you guys keep on thinking, oh, I just was late on my credit card 2 months ago, or I just had one late payment on my car. Guys, it can drop your score up to 100 points, those late payments on your open available credit. You must immediately stop having late payments and building up positive payment history, but I'll talk more into that. 35% payment history, okay? The next thing is 30% is amount owed. So this is where we're going to talk about utilization. Are you maxing out your credit cards? Are all of your loans at the highest, amount? You haven't kind of dug into them and started paying them at all. So amount owed is right behind that at 30%. But guys, there's 3 other categories of the FICO scoring model that I see that most of you guys are completely missing, and you're also messing up in these areas. And actually, if you add these 3 areas up, guess what? They add up to the 35%, which is payment history. So if you master some of these things in the smaller areas, you can also impact your score. This is why when I do credit jumpstart strategy sessions with you guys, when I tell you they're strategy sessions, baby, they're strategy sessions, because I have you guys doing things that you never even thought of, and people get a ton of results. So the next category, the bucket that many of you guys kind of miss, is 15% is average account length. This means that if you are working on your credit, if you need to establish credit, if you have bad credit, you need to start working on this immediately, because building positive payment history is still and is always going to be the #1 way to increase your score and to show credit worthiness to lenders, guys. So 15% length of credit history. The longer you have accounts open, the longer you pay items on time, guys, that's a tip, the higher your credit score will be. This is why many of you are not at 700 and 800 in 6 months, because length of credit history matters, okay? And then the next 2 are both 10%. So 10% is new credit and 10% is your credit mix. So this is where, guys, this is another tip. Another tip. If you have all revolving credit history and no installment, you are not going to have a super high score. If you have all installment and no revolving, you are not going to have a super high score. So having that credit mix and then also having too many brand new accounts, those things bring down your score. So when you're working on strategy, working on increasing your score, you have to first, step #1, which is what I just went through, is understand what goes into the FICO scoring model, okay? And guys, real quick, FICO scores. So there are different scoring models. In general, the scoring models go from like a 350 to like an 850. Benchmarks, 700 and above, good. 800 and above, excellent. I will always tell you, aim to have at least like a 680 or above, okay? Like it will at least get you things that you need, and acquiring those things will help you build even more and more and more, okay? And a lot of times for like FHA loans, for like first time home buyer mortgages, you a lot of times 640, 650 will get you to qualify for those items. So just understand, you don't have to be a perfect 800 to have quote unquote good credit or to get good financing options, okay? But 700 and over, good. 800 and over, excellent, but aim to have at least a 680 or above. A 640, 650 and above will get you most credit, okay? Another tip I want to give you guys too is, honestly, and I mean it, there is not much that 12 solid months of working on your credit will not fix. Look, drop the mic. There is literally no reason you guys should be in credit repair 12 months, like 2 years, 3 years, 4 years, 5 years. If you are in credit repair for over 2 years, you are doing something wrong. Period. And I'm even going to talk to people who have worked with me or started with me and didn't finish or whatever, because you always hear me say, make a plan, work the plan. This is key. Write that down too. Make a plan, work the plan. Many people get the plan, but you don't work it. So if I say open up a credit builder account and you're supposed to do it month number 1 and you do it month number 5, you can't be mad if you don't meet your goal in 12 months. If I say pay down your credit cards and it takes you 6 months to do that and you were supposed to do it in 2, then that impacts your time frame. If I say, your credit repair is going to take 6 months or 12 months, you get brand new collections, brand new late payments, you repo your car, you file bankruptcy, I have all kinds of stories. You get brand new hard inquiries. Well, then yes, your credit repair is going to take longer because you did not work the plan. And I'm not even going to say you did not. Things happen. But honestly, if you actually make a solid plan and you actually work the plan, there is not you should be getting to your goal 6 to 12 months, honestly. And besides things like, bankruptcy or foreclosure where the lending guidelines might be 2 or 3 years, with everything else, you should be able to acquire what you need in a good solid 12 months. Seriously. So you need to write down 12 months of solid discipline, work, strategy will get you there. Okay. So the next thing, the number 2 is understand the problem. This is the biggest reason why you guys have low scores. So many of you guys ask me how to increase your score, but the real honest answer, and I know you guys don't like it, but the honest answer is it depends on your specific report. Too many of you guys are using these general YouTube videos, general articles, and trying to repair your credit. You don't even understand the scoring model. You don't understand what the problem is, and that's why you're not getting a real result. So let me give you an example. Let's say you have excessive revolving credit history, and then you watch a video that says you need secured credit cards. You go out and get a bunch of secured credit cards. You didn't really help your credit score. You didn't really help your credit score. You heard it. You actually needed installment credit and you actually needed account aging to actually pay those bills on those trade lines you already had for a longer amount of time. So you took general information that may work for somebody else, but that may not work for you. You have to understand the reason why I do these strategy calls for you guys. And I legit, when I give people an actual strategic plan, and this is not a promo for you to get a strategic plan from me. This is why I'm telling you how to understand your score so you can understand you need to look at your actual report, not just your score. Look at your report and understand what is the problem. As soon as you can understand what the problem is, you can actually put together a plan. Is your problem you have too much new credit, so then it needs to age? Is your problem that you have, everything is maxed out, well then you need to work on utilization? Is your problem, that you have too many accounts that have late payments? Well then you need to start paying your open accounts on time, and then you need to actually start building up positive payment history. It depends on what's on your actual report. So once you know the scoring model, then pull your credit reports and then stop looking at just the score. Go through your reports and actually assess the problem, because the key to raising your score the fastest is going to be in putting together a plan to fix your problem. Does that make sense, guys? Look, I hope so, because that was the golden nugget right there. It really, really was. It is specific to you. Okay. The next thing is the average account length and also your credit mix. So guys, average account length, you have to start establishing, always remember 24 months of payment history is almost aging for a lot of lenders. You'll always hear me say 2 things. Open available credit factors more heavily into your score, and also the last 24 months factors more heavily into your score. So if you have accounts and you've only had them for 3 months or 6 months, you need to wait for them to age a little bit more for you to build up positive payment history. Let me tell you, I had somebody the other day that has had, credit challenges for 5 years, right? So let's talk about years. And then they're working on their credit and they're like, hey, Terri, I started working my plan. It's been 60 days. My score is not that high yet. Patience, grasshopper. So if you've had bad credit for 5 years, building up positive payment history may take some time, but this is where I'm telling you guys, if you are focused and you can really do it in 6 to 12 months, honestly, if you do the right kind of credit and manage it the right way. If you already have a bunch of new credit, then make sure you have the right type, revolving and installment. That's a nugget. And then don't add anything else. You don't need a bunch of items. You just need the right type of items. And I'll put a link in this video to my credit builder accounts only get those if you need. If you have all revolving and you need installment, then get the installment one. If you have all installment and you need revolving, then get in a revolving account, okay? And even for revolving, guys, so revolving credit is like credit cards. Even the type of revolving accounts you have matters, okay? So meaning like, a Home Depot card or a Walmart card does not factor into your score as much as like if you have a regular like Visa or a regular like MasterCard from like Bank of America or Wells Fargo or from Chase. So sometimes it's even the type of accounts that you have and who you have them with. That's a tip, okay? So open accounts, revolving and installment accounts, the right type of revolving accounts, okay? Building up positive payment history, 12 to 24 months. Let's talk about utilization. This is another one that is killing you guys. So utilization is basically the balances on your revolving credit cards, your revolving trade lines. And you will honestly hear that a benchmark is 30% and under, okay? But if you want to be super aggressive, meaning that you have other challenges on your credit report and you also have high utilization, guys, I want you to use strategy, meaning that if you tackle your utilization in a systematic way, okay, and get that down, that is the fastest way to get points quickly. Okay. And so you want to, so for $1,000 credit card, 30% and under means your balance is only going to be $300 and under. Okay. But if you want to be aggressive, then yes, absolutely. 10% and under is even better. Meaning, let's say you have late payments that won't be removed. Let's say you have a repossession or collections that won't be removed. Let's say you have other credit challenges. Then you're building up your credit, but you're being super responsible in this area, keeping your utilization even super aggressively low to work on the areas you can control and to show your credit worthiness. Guys, you hear me say that your credit report is your financial integrity. It's also like your financial report card, meaning you do things on time and you pay your bills and manage it on time. You have an A. And when you don't manage things on time, you have a D, an E, an F, and they will fail you and they don't want to give you credit. It's almost like it's honestly like an oxymoron, like whereas though like if you look good on paper, lenders will give you more money, right? But if you're struggling on paper, which means is probably the people who really need credit, to be honest, then they actually don't want to give you credit because you look like you're financially struggling. But honestly, like even with your credit cards, another tip is that even if you just make your minimum payment, a lot of times your credit card minimum payments are just $25, $30, $50. I want you to think about it. Does a real estate lender want to give you a mortgage, a conventional loan, a 203K loan where your payment is going to be $1,000 a month, and 2 months ago you were late on something that was $50? So that's the reason why paying all of your bills on time is super important. So that's another tip. If you have late payments, you need to stop that immediately. Pay your bills on time. Bring all of your open accounts current immediately. Before you work on collections and charge-offs, guys, I'm giving you game. Like that open available, bring your current open accounts current with no past due at all, and make sure there's no late payments. Pay that on time for at least 6 to 12 months. Period. Okay. Like that's more important. Okay. And then the next thing is also disputing inaccurate information. 1,000%. I wouldn't have a business. Credit repair wouldn't be a business. When you so you understand your scores, right? You pull your report and you assess the problem. I gave you tips about average account length, about credit mix, about credit card usage. But when there's negative items, late payments, charge-offs, collections, bankruptcy, repossession, all those things. Dispute inaccurate, unfair, unverifiable, outdated information with the credit bureaus, okay? Dispute. You dispute. Not a credit repair company, not a form letter, not a template. You dispute the items. Guys, a tip, never dispute over the phone. I'm having people, I called the credit bureau and no. Another tip, never dispute online. Well, I disputed everything online and no. I had other people, well, I went to Credit Karma and it said dispute and I clicked the button. No. Always write letters into the bureaus when you are disputing items. Always write to all three. You can write one letter, make 3 copies, send it to all 3 credit bureaus, TransUnion, Equifax, and Experian. Wait to see the results of your disputes. You can do multiple disputes. Show proof of ID that the dispute is coming from you. That means a copy of your driver's license or 2 utility bills showing your current information and your current address. And wait to see what items come off of your file. And then handle the items that are verified as accurate. That is a strategy that will help your report. So you're understanding your scores, then you're understanding the problem, then you're disputing items that you want to get off of your file, and you're managing your debts well. Does that make sense, guys? And I'm going to address it in this video, the big one that you guys, I did a whole video about it. It was like a while ago about authorized trade lines, about piggy banking. Okay, sometimes you hear it called piggybacking. So guys, there are whole credit repair companies that have their whole business model on just piggybacking on authorized trade lines. And I literally do not sell trade lines. I have never spoken to any of you where I've told you to buy a trade line ever. And I have a successful business endorsed by credible people, credible lenders, credible real estate people. And why? And I do it the right way because my files can pass underwriting. The bureaus and lenders are cracking down on this, guys. They understand that authorized trade lines are borrowed credit history. So if you don't know what an authorized trade line is, that means that, let's say I have a Discover credit card. I have had it for 5 years. It has a $10,000 credit limit. It has no late payments. And let's say with a $10,000 limit, I have a $1,000 balance, okay? So it's been open a long time. It has a high limit. It has no late payments. It has great utilization. That is a really good account. I'm the primary card holder. Let's say I add my son as an authorized user. Then all of that positive payment history will go on his credit report, and that can give him a boost. Guys, yes, if you have your own established credit history and maybe you just need a boost, meaning you've been working on your credit and as a couple of points you need to get from a regular loan to conventional, or a couple of points you need to get to the next financial product, or whatever it is, or you need to get a boost in the meantime because of a mistake you made, but you have your own primary accounts established, then adding an authorized user may help you. But you cannot think that you're going to go ahead and ask a lender to give you $300,000 and all of your trade lines are authorized. You must have your own established primary accounts. That's why I'm telling you, start right now. That's the honest to God truth. And the other thing is that I don't buy and sell trade lines, guys. It's not technically illegal because, the person agrees to do it, but it was never the intended use. So usually authorized trade lines may be like husband and wife, brother and sister, maybe a couple, whatever. And so that's where legitimately, like sometimes I have couples go through credit repair and maybe, the wife has better credit than the husband, or the husband has better credit than the wife, and they have like a one trade line. And I'll say, hey, add your wife as an authorized user. They know each other. They have a relationship. And they're not paying somebody for this trade line. So legitimately, if you have your own established credit history and you have a family member or friend that that is willing to add you as an authorized user, one account, maybe 2. You don't want to have like 10. Then that can give you a boost. But that is not credit repair. That does not guarantee an approval. And that is not the only thing you should be doing. They still 1000% rate your primary accounts more heavily. So that's where there's a big misconception. And a lot of times, like you'll see like a lot of these videos, like they're talking about authorized trade lines, but those people are getting cards. And those people are getting credit cards. And those people are getting cars. And those people are just getting regular loans. Our channel, my channel, is about breaking generational cycles of poverty. It's about leveraging your credit to build wealth. It's about acquiring assets. That's the bigger money. That's mortgages, conventional loans, commercial loans, 203K loans, hard money lenders, business loans. So for that bigger money, that's not going to fly. Okay. And then the last thing is also student loans, guys. So some of you guys have credit challenges and you'll also have student loans in collections or student loans in default, and you'll work on all this stuff over here and you'll be like, well, my credit score is not raising. Guys, you can't ignore your student loans. So if you have student loans that are in collections, especially if you're trying to get like an FHA loan. So an FHA loan is like for first time home buyers and they're government backed. You cannot have student loans in collections and get approved. Like, they have to be out of collections. And so you need to work with your lender to get them, like, either on an income driven repayment plan, consolidation, get on a rehabilitation program. Do not use these debt consolidation companies. I did a video about that. I'll put a link in the video, link in this description. You do want to reach out to your student loan companies. I did a video about that. I'll put that link down here. But you need to handle your student loans also. And a lot of times when I'm going through the reports with you guys, you have things on there you have no idea that how they're reporting. You don't understand your file. And so that's why you can't really put together an effective plan, because you don't understand your credit in the first place. Okay? And so I'm going to end there because that was a lot. So let's recap. So number one thing is you must understand what goes into the FICO scoring model. 35% payment history, 30% amount owed, 15% average account length, 10% new credit, 10% credit mix. You need to be paying attention to all of those areas. The second thing is pulling your credit report and finding out what is your specific problem. Is it your average account length? Is it too many inquiries? Is it you have no credit? Is it that you have collections and charge-offs? You have to understand what's bringing your credit down first to put together a plan to actually raise your credit score. And then the last thing, well, the third thing was kind of disputing items that are inaccurate, unfair, unverifiable, to see what can get deleted from your credit report to help you boost your score. And then the last thing is I gave you a bunch of kind of nuggets in each of the individual areas on, like, paying down utilization, having a credit mix, getting credit builder accounts, making how to use an authorized user account the right way, the right reasons. And then even, like I said, I'll put a link in this video for credit builder accounts, for student loans, and also the debt consolidation video, and letting you know that why that's not really a good option. So there's other options out there for you. So raising your credit score quickly. Start now. Know the problem. Make a plan. Work the plan. It should not take you more than 12 months. Seriously. Guys, a benchmark. If you're getting new accounts, usually 3 months, 6 months, 9 months, 12 months, you'll start to see, it increase in those benchmarks. And really for like the bigger amount, you want to pay on time for 6 months, on time for 12 months. That's when you'll see a more responsible kind of boost where you're showing credit worthiness and you're actually increasing your score. And then we can get you the big money so that you can break generational cycles of poverty, build wealth, and have a legacy. Amen. So I hope that was helpful for you guys. That was a lot of information. Go back, watch it, take notes, like, share, comment, subscribe, and have a super amazing day on purpose.